I acknowledge that I am recording this webinar from the lands of the Gadigal people of the Eora Nation. I also acknowledge the traditional custodians of the various lands on which you all work today and the Aboriginal and Torres Strait Islander people participating in this meeting webinar. Well, good afternoon, everyone. My name is Kim Kellaway and I'm Head of Clients and Markets at HLB Mann Judd. And on behalf of the ENFP Strategic Alliance of HLB and the Commonwealth Bank, I'd like to welcome you and kick off 2022. Today we have two guest speakers, Mel Yates from the ACNC and Fridrich Housa from the AASB. We also have Allison Covington, founder and director, Good 360. So I'd like to now hand it over to Aidan Smith, partner and head of HLB Mann Judd's not-for-profit in our association. Over to you, Aidan.
Thank you, Kim. And I'll introduce our first speaker. I'm very lucky to have him here today. So Mel Yates. I'm sure many of you know who Mel is, but for the one that maybe doesn't, I'll give him a bit of an introduction. So Mel leads a collection of reporting from Charities with a focus on reducing unnecessary regulatory obligations, and he ensures that the ACNC has sound corporate governance arrangements. So Mel's been with the ACNC since April 2016. Before that, Mel worked at the ATO for over a decade across compliance, internal policy and assurance, as well as operational financial management and government tax management roles. After he finished university, Mel travelled and worked in England in a social services finance role, beginning his career at a large professional services firm and has worked for the Victorian government in a finance role. So not only does Mel work at the ACNC, he's also Deputy President of the Victorian Division of CPA Australia and is a member of CPA's Victorian Public Sector and Not-for-Profit Committee as ACNC liaison. So we're very lucky to have Mel here. He's in the engine room at the ACNC. So what's he going to talk about? Well, it's not going to surprise you that Mel's going to be giving an ACNC update. Just remember, as Kim said, if you've got any questions, please type them in the Q&A box and we'll get to them at the conclusion of Mel's presentation. So Mel, over to you.
Thank you very much, Aidan. I would like to start with a poll question. So one of the things I'm going to talk about today is the reporting changes that are going to be flowing through the sector starting in July. So I'm just interested from attendees today, are you expecting changes to your reporting requirements as a result of the changes in revenue thresholds? So if you could please participate in that poll, just to get a bit of a sense of what people's thoughts are about the upcoming changes. You might not know about them, you might know about them. I'll go through them today, so just interested in your thoughts. Just while that poll is still open, I want to thank HLB Mann Judd and CommBank for the opportunity to present today. I also extend my acknowledgement to Aboriginal and Torres Strait Islanders. I'm on the Wurundjeri lands of the Kulin Nation in Victoria, and I pay my respects to elders past, present and emerging. Okay, so some good results. So 18% of respondents think that they will have changes, and then pretty close between no and unsure. So that's really, really good. Thank you very much for your participation. I will touch on this today. We can hopefully change some of those results by the end of today's presentation. And I'm going to start on a reporting update. What I want to start on, and I'm sure some of you would be familiar with this, but one of the things that we've done over the last couple of years is we're encouraging charities to provide a little bit more disclosure around sources of government revenue. So we released some best practice guidance, which is specifically targeted at those organisations which do have to prepare financial statements. And this best practice guidance, it complements existing accounting standards and the requirements that exist. But we really wanted to spell out for some charities that may not be preparing general purpose financial statements, we just wanted to spell out a couple of things that we think as the regulator would be really, really good for users of financial statements. And what we said in this best practice guidance is where a charity receives 10% or more of its total revenue from government, we'd like to see a little bit of extra information included. Now, this can be included in a note, so there's no need for this to be on the face of the financial statements. Notes are fine, but what we've asked for is a breakdown of total revenue that is being received by each level of government, the names of the government departments or agencies which have provided government revenue to the organisation. We've suggested that no more than 10, including the totals from each. So it's not necessarily going to be all of the government revenue, but including the top 10, that is likely to give users of the financial statements some really good information, some richness to help them understand where a charity gets its revenue from and the types of government organisations that are providing that funding. One of the other things that we also have suggested is a best practice measure is including some of those third-party types arrangements. Quite often there will be charities that will provide goods or services to beneficiaries, but the charity will be paid by a form of government or an arm of government. And the classic example is the National Disability Insurance Agency. So we know that there are many beneficiaries receiving services through that program by government, but the interaction is directly between a charity, the beneficiary, but it's being funded by government. Now, the reason that we've asked for all of this, and it's best explained by looking at an example here, the primary reason is that just under half of the revenue that goes to the sector comes from government. So clearly they're the biggest funder, and that's across all tiers of government. It's not necessarily the Commonwealth, it's not necessarily the states, it's not necessarily local government, because every charity is different. So there'll be a different makeup depending on the context where that charity fits in, where it performs services and who funds those services. But that's an example of one of the notes that we have suggested charities should try and adopt as a best practice measure, just to give users of the financial statement a little bit more information to help understand the sources of revenue, to enable consistency, comparability, and those sorts of things. So, following on from the poll question, I just wanted to spend a bit of time talking about upcoming changes to charity reporting. Now, these all stem from the ACNC legislation review. So that was tabled in 2020. Seems like an eternity ago. We've had lots of things happen between then and now. So it's coming up to 2 years since government announced what it thought of the recommendations from the expert panel. I'm only going to focus on these 4 recommendations, primarily because they're really focused on charity reporting. There were 30 recommendations as part of that review, but these are the ones I want to focus on now. Now, starting with recommendation 12, this one specifically talked about the reporting thresholds. Now, the reporting thresholds are the different tiers of size. Now, revenue is the determinant of what size a charity is. The size determines the reporting obligations. Small charities just need to do an annual information statement. Medium and large charities, they also need to prepare a financial report, and large charities have to get that audited. Medium-sized charities, although they need to prepare a financial report, they are able to get a review of their financial statement as opposed to an audit. Now, the thresholds are changing quite significantly. So at the moment, small charities are revenue below $250,000. That's total revenue in a financial year, a reporting period. That is going to change from below 250,000 to below 500,000. that comes into effect from the 1st of July 2022, only a couple of months away. That will be in the 2022 Annual Information Statement. It's really important that I underline that this does not apply to the 2021 AIS. There are a range of charities that are still yet to provide their 2021 Annual Information Statement because of the way the reporting cycles operate. So many charities have a substituted accounting period, which is always later than the start of a standard financial year, being 1 July. And then there's up to 6 months after the end of that reporting period to provide reporting to the ACNC. So this kicks off 1 July 2022 for those charities that will be doing their 2022 Annual Information Statement then. Fairly low complexity, and obviously that impacts the AIS because there are different financial labels that are collected through the AIS, and it also impacts the financial report because there will be less charities that will need to prepare a financial report. So that threshold to prepare a financial report will move from 250,000 to 500,000 in annual revenue. Medium-sized charities will go all the way up to annual revenue of 2,999,999. Once a charity hits that 3 million in revenue, then it will be large and it will need to have an audit of its financial report. So it's really important to understand those changes in the context of obviously what's happening. Now 13, I won't spend a lot of time on. This is only relevant to small charities, and it only relates to those charities which use cash accounting. Recommendation 13 talked about the ability to provide a statement of resources and commitments. And this is really where the Annual Information Statement labels collect information that it was felt was more accrual based. So if small charities use cash accounting, they will have the opportunity to provide narrative about the resources that that charity has in order to fulfill its charitable purpose, but also commitments that it has as well. So considered low complexity because it only relates to a subset of small charities, and there's no impact on the financial report because those entities are not required to prepare financial statements. Now, I'm actually going to jump down to number 15 first. I'm going to talk about remuneration because that comes into effect from 1 July this year. This relates to the requirement for large charities. I'm looking at the medium complexity. For large charities to provide remuneration of key management personnel, that is, any senior executives and responsible persons. So those who are running the organisation and general purpose financial statement preparers currently need to provide this, but the other side of this is special purpose financial statement preparers. They will be required to furnish this information where there are more than two or more, if you like. So more than one really is what I should be saying. Where there's more than one, so a minimum of 2 remunerated key management personnel. So there are some exceptions. It doesn't apply to management entities. That is, if your charity only has a key management entity, which is classified as key management personnel, that exemption doesn't apply. So there's a lot of information to digest here, but that is starting from 1 July 2022. Comparative information is not required. It is only required for the first reporting period. And then in the second reporting period, that comparative information will be available because you already would have reported that the year before. Now, I just saw a question flick up. AIS, that stands for the Annual Information Statement. That is the report which all charities are required to complete and give to the ACNC, which lists a whole range of information about the charity, about the people who are running the charity, what the charity does, the programs that it operates, financial information, some human resource information. So it's basically the form, if you like, that charities need to complete. Now, it is available in an electronic form, and around about 98 to 99% of our interactions are electronic. So we're digital by default. So generally that is completed by charities electronically. The AFR, that relates to the financial report. So AFR is the annual financial report. So that's the distinction of both of those. Now, recommendation 15 only relates to entities that have to prepare financial statements. So basic religious charities, they are exempt from providing financial information. So that recommendation does not apply. I'll jump to recommendation 14, related party disclosures. This has a different start date. This will commence from 1 July 2023. So that means that charities will need to have systems, processes and controls in place from the 1st of July 2022 so that they can capture and record related party transactions to then make the relevant disclosures in the annual information statement and in the financial report, where a charity is required to prepare one from 2023. The remuneration is only total. So current requirements for general purpose preparers are different to a total which will need to be provided for special purpose preparers. Special purpose preparers can provide additional information, additional disclosures in the financial statements if they want, but it won't be a requirement. All right, I do want to touch a little bit on surplus and profit. Now, this comes up all the time. We've got the term, if you like, not-for-profit. Charities must be not-for-profit by definition, or they are not eligible to be a charity. But we've got other terms that people use within the sector: for-purpose organisations, for-benefit organisations, those sorts of things. So not-for-profit, sometimes we do get questions from time to time from people saying, well, we want to make a profit, we want to make a surplus, but we're not allowed to. The term not-for-profit, it really relates to the distribution of profits. It's great and it's encouraged to make a surplus, but that surplus has to remain within the organisation and go toward the charitable purpose of the organisation. It can't be distributed. Now, there might be distributions to other organisations, and that's fine, but it can't be distributed to individuals or to members and the like. So that's basically all I want to say in relation to this. It's really important, as I said, for organisations to be sustainable. If your charity makes a surplus and has funds that it can grow and contribute and use toward fulfilling the charity's mission or charitable purpose, that's a great thing, because it means that the organisation can help more beneficiaries. It might be able to undertake new programs. It might be able to grow and offer services in a different locality or in a different way, for example. So it's really important for viability and sustainability. And an example of why this is important is before we had the coronavirus outbreak, many organisations had reserves. That was money that was set aside that had been usually grown from surpluses during or accumulated through prior periods that were just sitting there just in case something happened, just in case the organisation needed some funds unexpectedly. Now, COVID certainly threw the world a curveball, and there are many organisations that thankfully had reserves from previous surpluses they were able to draw on and use to continue operating, to continue helping the beneficiaries. So it's really important that we do have a talk about this. I do want to touch on reserves. It's really important that your charity, if it has reserves, it needs to have a plan for what those reserves are used for. There's no restriction on how many reserves can be carried forward or can be available, or there's no restriction on using all of the charity's reserves at any point in time. The important message from our perspective as the regulator is that the charity needs to be clear on what level of reserves it is seeking to have, what those reserves might be for, and this is all dependent on the context of your particular charity. So a charity might be accumulating reserves and might want to be building up money because it might want to build a piece of infrastructure and it needs those funds. Or the charity might just want to have a couple of months worth of operating expenses, just in case something happens. There might be other situations that are different where a charity doesn't need any reserves at all. The important thing is that your charity needs to understand what its plan is, and it needs to make sure that those within the organisation who are responsible for making decisions, they understand that. But reserves can be a really good tool to use where a charity needs resources unexpectedly. Things happen. Government grants, which are expected to continue, they might suddenly end through a policy decision of government, a change of government. All of these things happen from time to time. So it's really important that that level of awareness is known within organisations. I do want to touch briefly on program reporting. Now, a charity program is the way that we collect information from charities about the activities or the service that a charity runs, whether it's ongoing or temporary, whether it's minor, whether it's significant. This will help to demonstrate what the charity is doing to pursue its charitable purpose toward its beneficiaries. Now, in the information statement, we collected this for the first time in 2020. We collected information about charity programs, program classifications, which is basically a taxonomy of over 800 categorisations of what a charity can do, the beneficiaries that are helped, and the operating locations, and an optional web link. There's information on a website about the program. Now, some programs are physical locations, some are online, and some charities provide grants to other organisations. So all of this is available within the classification, and we've used that information to pre-fill for the 2021 annual information statement, and we'll continue to do that. Now, this slide has a great tool for your charity. The link there to the Ais Program Previewer is a tool that you can use to actually go in and test how you would answer this question in the annual information statement. It's also a really good tool to give to other people within your organisation who might think that there is a different classification, or they want to have a test of how information should be reported. So we provide that tool to help charities work through how they will report that information in the annual information statement. And it's really important for those who are stakeholders in charity to jump in and be familiar with that, so they understand how charities might classify themselves as well. Now, we have recently changed the charity register search. This is following the changes that we made to the program information that we collect in the annual information statement. So we can now search by charities, and this will enable people to look at a geographic location, a map, their local area. They might be looking for another area, They might be looking for a particular cause. They might be looking for beneficiaries that they want to help, or they want to understand what charities help a particular beneficiary type. All of these things are able to be searched now on the ACNC register. And because charities can report up to 10 programs in the annual information statement, it's really important that charities have a think about what they are reporting, how they're reporting it, so that people who are interested in finding out about the charity, the information is available to them on the charity register. So I really encourage you to go and have a look at your charity register listing, because what you see on the ACNC register, that is what the public are seeing. That is what the media are seeing. That is what donors are seeing. Some people check the charity register because they want to find out who is operating in their area. They might want to support a particular type of charity, or they might want to support charities that do particular things. So it's really, really good to be familiar and up to date with what your charity register listing says. So I strongly encourage you to have a look at that. This is an example of the charity register and the enhanced functionality which we've launched, allowing people to search by charity program. So you can see there that the type of activity or service, there's location, which is pretty flexible. There's also the option to the online versions of charity programs, and beneficiaries is who the charity helps. So I commend that to you, and I encourage you to jump on and have a look. Now, director identification numbers. This is something which is relatively new, and it only affects certain charities. So a director identification number is a unique identifier which is being given to a person who has verified their identity through the Australian Business Registry Service. So that is in time going to be within the, it's basically going to be the tax commissioner who is going to be the registrar of this. There's a bit of movement happening at the moment in terms of the ABR, the Australian Business Register, and the registrar. So this is following changes that were announced by government in relation to the ASIC register, as well as a whole range of other business registers. They're consolidating them all into the one place, which has got extreme benefits, will be much easier to navigate. But one of the outcomes of this is that some directors will be required to get a director identification number, and they will need to give that to their charity or their company that they are a director for. So in the ACNC context, responsible persons, they are deemed to be directors. So if your charity is and I'll get to this shortly, but there's certain types of structure that will be required to adhere to this regime. Now, why was it introduced? So the government introduced this to reduce phoenixing. That is where a company is set up, a whole range of creditors are owed money, the organisation goes bankrupt, if you like, and then those creditors don't get the monies that they are owed, and then those same directors will often set up a new entity doing the same thing and repeat that scenario again. So it's all around integrity and reducing that misbehaviour which has been occurring, particularly in the corporate space. It's important to note that there are obligations under the law, and I'll talk about this a little bit further in a future slide, but it is a unique number that will attach itself to a director. So it's a little bit like a tax file number in the sense that directors will be able to apply for a director identification number. They'll need to substantiate their identity and they'll need to prove who they are. Once they have that, that will stick to them and will be with them for the rest of their life. Now, who needs to get a director identification number. In the ACNC context, it will be Aboriginal and Torres Strait Islander corporations. So those are organisations which are regulated by ORIC, the Office of the Registrar of Indigenous Corporations. Any companies that have been incorporated through ASIC, as well as a registered Australian body or a registered foreign company. But if your charity is an incorporated association, for example, there's no impact. If your charity is a trust, there's no impact. So there are some exclusions. Now, who needs to apply for a director ID and when does that need to happen? So there's a difference. For entities that are incorporated under the Corporations Act, where a director is appointed from this point on, they need to have a director ID within 28 days of appointment. That will change over time, and in April of 2022, a director will need to have their director ID before they are appointed as a director. So there's a transitional period, and then for ORIC organisations or the Aboriginal and Torres Strait Islander CATSI organisations, they have until the 30th of November 2023 to get a director identification number, after which time it needs to, existing directors of Aboriginal organisations, they have until 30 November 2023 to get their director ID. But when someone becomes a director of those entities from 1 November of this year, they need to have their number before appointment. Now, I just want to touch on some Dgr reforms, which are currently rolling through the sector as well. Deductible gift recipients. So these organisations are quite special under taxation legislation. They are able to collect monies from donors. They're able to issue receipts to those that donate to their organisations. And that means that you or I who donate to these organisations, we can claim a tax deduction in our tax return. So it's a bit of a jewel in the crown, if you like, because organisations find that if they have DGR status, it's much easier to be able to collect donations. There's more incentive for people to give money to those organisations. Most of these organisations that have DGR status are already charities with the ACNC. However, there is a change which took effect from December last year, which will require many, many organisations to become registered charities with the ACNC, some which are not currently registered. So I just want to put this under your nose. Have a look at what the information is on the website. Have a think about whether this impacts your organisation, and if it does, you need to start to take action before February of this year. There's a lot of resources available, and we are doing this in conjunction with the ATO. We have been doing some reviews of deductible gift recipient organisations. We've been focusing on PBIs, that is public benevolent institutions. We have mainly completed the 2021 reviews, and when they're done, outcomes will be reported shortly. And we're starting on 2022 reviews shortly. We're getting really, really underway with those. So keep an eye out for the report that will come out about some of the issues that have been identified from these reviews. If you're interested, it's always good to use the resources that we have on our website to do a bit of a self-assessment of whether your house is in order, for want of a better word. And there's action that you can take in order to correct anything or take action to fix anything that you identify which needs attention. I do want to touch on resources. We are developing 12 short courses. specifically for board members of new or smaller organisations, really to outline what they need to know about their role being a director or a responsible person for a charity. Now, each short course is going to be 1 to 2 hours long. They can be done independently. You don't have to do all 12. If you want a certificate to demonstrate that you've completed the program and you've gone through the assessment that's required, you can get a certificate. There'll be a very, very small fee associated with that. We don't host this program. So because we have arrangements for it to be hosted externally, the very, very small fee that pays for that process with that third party. And if people want, they can progressively work through each of those 12 short courses. This is an outline of what those short courses are. So you can see that it starts off, one of them is who we are and what our role is, as well as governance standards, external conduct standards, what you need to think about if you want to be a registered charity, what you need to think about if you're thinking of becoming a responsible person or joining a board, some financial reporting and management of charity finances as well, and some other things that we're focusing on, safeguarding and fraud prevention, which are quite important within the charity sector. So just before I wrap up, I just want to remind everyone that we do have a lot of resources available. Webinars, podcasts, we have a monthly charitable purpose newsletter, which outlines updates from our commissioner and from the ACNC. So I would encourage you to register for that. That is available on the ACNC website. If you go down a little bit from the top, I think it's blue. There's a blue area which will enable you to subscribe to the charitable purpose e-monthly publication. So subscribe to that, but also have a look at our podcasts and our webinars and other resources which are available on the ACNC website. They're developed for your purpose, for your use. And so I really, really encourage and commend you to focus on that. I do want to also mention the fact that we do have 3 elections coming up this year. Now, I know many of you are in New South Wales, and the first election is going to be South Australia. Then, if we listen to the rumblings in the media, the Commonwealth election will happen sometime. And then in Victoria, there'll be an election at the end of the year. So even though your organisation might not be directly impacted, I know some of you will be. So just a reminder that we do have political advocacy advice and guidance on our website, specifically around what charities can and cannot do in terms of an election. In very, very basic terms, if I was a charity and I put out information saying, vote for HLB Man Judd, I would be crossing a line, and potentially that would be not appropriate behaviour for a charity. But if I ranked every political party in terms of their policies in a particular area, that's fine. Or alternatively, if I said, don't vote for the Commonwealth Bank, again, that's crossing the line. So anything that your charity does in the context of political advocacy and elections and policies, it's always best to prepare information that outlines policy positions, but doesn't say vote for one particular party or vote against one particular candidate or a party. So don't be for or against a particular political party. Use your communications in a more, this is our view and our understanding of different political parties and what their stance is on particular policies. Thank you very much for your time. I will finish there, and I think I'm handing back to someone else and happy to take questions.
Yes, thanks, Mel. I'm someone else, so thank you for that. I think the key takeaway for that whole presentation is vote for HLB Man Judd. That's why I've got it from that. Don't know what for. No, seriously, that was a wonderful presentation. Mel's presentation is actually the most, when you look at the number of attendees that come to these seminars, it's really, really popular. So thank you for Mel for that. Now we've got some questions that we'll just go through just now. First one is a charity received significant funding from a foundation and it gets all of that funding from the Commonwealth. So under the best practice reporting, should that be considered for Commonwealth funding and then disclosed in the financial statements?
That's right. So we would encourage your organisation to include that information. If you only have one source, what we say is because some charities get a lot of different sources of government revenue, then we've sort of limited and suggested that 10 should be sufficient, the top 10 in terms of dollar amount. So if you get revenue from one source of government, include that in the notes. And that will be sufficient to adopt the best practice. Thanks for the question.
Thank you. Now, this next question, I think you did answer it during the presentation, but just to clarify for everyone, when it comes to disclosing remuneration, do you need to disclose the names or is it just a total remuneration that you need to disclose?
So the changes that I talked about, they are coming into effect for those charities that prepare special purpose financial statements. So it's not the names, it's only the amount, and we're still working through how we're going to implement this in the annual information statement. So there's two different reporting requirements. The annual information statement, there will be questions about key management personnel within the form. The actual wording and how those are constructed is still being refined. In the financial statements, it is the total. Names will not be required. However, for charities that prepare general purpose financial statements, then they need to comply with the requirements of whichever standard they're using, whether that's 124 or 1060. So there is a bit of a distinction. The way government responded to this recommendation and the reason that there is an exemption for one individual remunerated key management person is because the government didn't think it was fair for those organisations not already reporting this information. It wasn't fair to be able to look at a financial report and see that they have one key management person and the amount that they're being paid. So that's the reason for that exception. I did touch on the fact that there is that exception where there is only one remunerated individual, but that exception doesn't apply where there is a separate management entity. So there is a distinction there, and we're developing lots of guidance to support the implementation of this. So that is still progressing, and we're hoping to release that in the near future.
Thanks, Mel. Next question. So this one, New South Wales. So directors of schools, they've got mandatory governance training requirements. So this ACNC, the training that you were mentioning earlier, will that training, would ACNC be in the list of approved providers of governance training for NESA?
That's a really good question. I'm not familiar with the NESA requirements, and I would probably say no. The purpose of these training modules, it's pitched at new directors. It's pitched at those who are probably joining a board, becoming a responsible person for the first time, generally for smaller to medium-sized organisations. So I would think that the NESA standards are probably more detailed than what we're planning to cover in this training. And I don't think it will be a substitute, but without knowing the intimate details of what NESA standards are and what the requirements are, I can't categorically answer that. But I would think on the face of it, they would be, you wouldn't be able to complete the ACNC for training in place of those NESA requirements.
Okay, thank you. Now, back to when you're talking about earlier, the various changes that are happening with reporting thresholds and etc. If it's the dates when this comes into place, so if it's the 21-22 year, does that mean it starts 1st of July 21 or is it the 1st of July 22?
So it's the reporting. So we're talking about the new thresholds, just to be clear, is that right? Yep.
I think so, yep.
Excellent. So the reporting that is completed in the 2022 annual information statement, which is the period that started 1 July 21. So it's the next AIS which we're going to release. And I did mention that some charities, they still are not due to give their 2021 annual information statement. So it depends on each individual charity, whether they have a substituted accounting period as to when their AIS is due, but it starts in the 2022 annual information statement, and that is reporting for the period that ends on the 30th of June 2022, which started 1 July last year.
Thank you. All right, so questions come in with the director ID, and it's really what to do with it. If someone's collecting them from the various directors, but doesn't know where to submit them. And then if you're a director of several entities, are these all tied together? So your director ID is then linked to all these entities.
So that's a really good question. At the moment, the requirement, as I understand it, is that directors who have a director identification number, they need to give it to the organisations, including charities, that they are a director for. At the moment, right now, we are not collecting that information, but watch this space, because over time, it's likely that this will change, and it's likely that we will need to collect that information at a future point in time. All of that detail has not yet been settled. So we're working closely with with other parts of government who are implementing this measure, and it's quite a big measure. It affects many, many individuals across many different organisations. So if any directors are required to get a director identification number, at the moment, it just needs to be given to the charity that they are a director for. The charity needs to keep them, and then over time, potentially, we will be collecting that.
Thank you. Next question. Actually, it's a question for me. You can take a break here for about 30 seconds. Mel, the question asked about is the opportunity within this group to share what government funding the various charities receive. So some receive more than others, some receive the Job Saver, some get grants. Now, as far as sharing this, we've got our LinkedIn group that Kim, it's our exclusive not-for-profit LinkedIn group that Kim helps look after. So you can always reach out to people in that community. And we're a very sharing community as well when we're here in person. It makes it great so everyone can mix. We obviously can't do that just now. So I'd encourage just now, if you go to that LinkedIn group, if you're not a member, Kim will provide details of how to join that group, and there's people can ask questions within that. All right. I think there's a couple more questions in the chat. Let me just go see if we've done all of those.
Hayden, I think that just that clarification of the
Yes.
3 million in revenue, if Mel wanted to just clarify that again in terms of having the accounts audited for the FY 2022 year.
So for periods ending, and this is on the assumption that a charity is reporting on a financial year basis. Again, many charities have substituted accounting periods, so it may be starting later. But for those organisations using a standard financial year, the period that started 1 July 2021 and finishes 30 June 2022, so in a couple of months' time, that is the time when the new thresholds take effect. charities with revenue of up to $499,999 will be small, do not have to prepare financial statements. Once a charity hits $500,000 in total revenue, they do have to prepare financial statements and get them reviewed. Then the medium size goes all the way up to $2,999,999. And then at the 3 million threshold, that is when an entity becomes large and an audit is required. So the analysis that's been done indicates that roughly 2,500 charities are currently medium, and they will become small under the new thresholds, so they won't have to prepare financial statements. If a charity has to, for other reasons, it's in their governing document, they might have a funding arrangement which requires the preparation of financial statements. We can still collect them, and we encourage them to be given to us and put them up on the register. And there's been analysis done that roughly the same number, around about 2,500 to 2,700 charities, will move from large to medium, which means that they still have to prepare financial statements, but instead of an audit, they can get them reviewed. Again, there might be reasons why those entities want to continue getting their financial statements audited. It might be a requirement for another regulator. It might be a funding agreement requirement. They might just want to do it because that's what they want to do as part of their organisation. So it depends on many variables, but those thresholds come into effect at the earliest on 1 July 2022, when charities complete their 2022 annual information statement. For those charities that are still completing their 2021 annual information statement, the previous or the current thresholds apply. It is only when those charities are ready to complete their 2022 annual information statement. And schools are a really good example of this because they generally use calendar years. So for those entities, the 2022 calendar year, they will be reporting in the 2021 annual information statement. So it can be a little bit confusing depending on the charity, but hopefully that provides clarity.
Thanks, Mel. It's just a bit out of time. Other questions we'll take offline and answer those. Just a very simple yes or no question. Is there a limit to the size of reserves a charity can have?
No.
Perfect. All right, thank you all very much for getting involved in asking all those questions. So we'll take the others offline. Unfortunately, we've run out of time, but thank you very much, Mel. Thought that was going to be an excellent presentation, and well, exceeded my expectations. So another fantastic presentation. Thank you very much for your insight. All right, so what have we got next? Now, as Kim mentioned before, we've got two excellent presentations today. We've had Mel's, but before we get to the next presentation, we're going to interrupt our regular programming to bring a bonus for you all. We're very privileged to have Allison Covington from Good 360 with us. So Allison's going to share with us the Good 360 story, highs and lows throughout 2020 and 21, and have a look at what 2022 has in store. But an introduction for Allison first. So who is Allison? Allison brought the Good 360 charity to Australia, and that offers the retail sector a sustainable, community-focused option to redirect surplus product from landfill. Inspires all Australians to ensure that brand new product must have a first life use and nothing useful will go unused or go to waste. So Good 360 is Australia's largest online marketplace. It matches businesses' surplus brand new goods to people who are most in need. And in just over 6 years, over 300 retailers and manufacturers have signed on and donated over $224 million in brand new product. Includes essential toiletries, household items, clothing, shoes, PPE, stationery supplies, and just names a few. A network of over 3,000 member charities in disadvantaged schools across the country, across 31 cause areas. And they order the goods they need from the Good 360 website, and it's available 24/7. So it saves a lot of time and also precious money as well. So thanks Allison's business model and vision, we've got more than 27 million brand new items that have been matched to people in need, helping to provide dignity and equality. And of this, like due to the back-to-back disasters we've had over the last few years, the droughts, the floods, the bushfires, and COVID-19, that's resulted in over 12.6 million items that have been matched directly to assist communities in disaster recovery. So I think Goods 360 is really well on the way of achieving Allison's goal of matching $1 billion worth of brand new goods to Australians in need by 2025. So Allison, it's wonderful to have you here today. Over to you to share your story.
Thanks, Aidan, and thanks, HLB Manjard. So I was asked to have a chat about the highs and lows of the last 2 years of COVID, and it was a really good chance for me to reflect on exactly, what has happened in the last 2 years. And I think, all Australians, we've had a really rocky ride over these last 2 years. So I had a look, it has been almost 2 years that we moved our staff to working online. It was early March in 2020. And for Good 360, we'd had, a fantastic 5 years of being able to help Australians. At that stage, we had done $125 million worth of goods, which was 11 million items, and we had 15 staff. And most people think that Good 360 is quite a big organisation. We look like we're punching well above our weight. That's 15 people making that amount of good. But then COVID came along, and, for all of us in this sector, that was a really big thing for us to be able to react to. But we thought we handled it quite well, and we looked at this and thought, well, we've got this. We can work from home. We're an organisation that is an online matching platform. So most of our technology was in the cloud. So when I reflected on this, I thought, Good 360, COVID was 3 phases over this last 2 years. So phase 1 was about getting everybody, working from home and being able to help the community. And so phase 1 to me was, we've got this. We talked to our staff about the fact that, we'd had the funding and they would be able to continue in their work. And that was really important because, as we all know, at the beginning of COVID, we didn't know how long it was going to happen for. And when we moved our staff to working online, we thought, maybe it's a few weeks, maybe a few months, but here we are 2 years later, and we're still in this hybrid situation. But phase 1, I thought we did really well, and everybody was working from home, and we were really working hard to help the community, and we had our sense of purpose, and we were working hard to do that, and off we went, and that was fantastic. And then, we went back to having a hybrid situation where we could go back into the office, and we could do working from home as well. And then for many parts of Australia, phase 2 happened, where we had another round of lockdowns, and we thought, we've got this, we know how to do this. But that continued to go on for quite a long time. And I think that for me was where we had actually underestimated what phase 2 would look like. And for all operations, all organisations, nobody knew how long phase 2 was going to last. And we just bunkered down to help Australians, because that's what we do is, we had to keep getting goods out there to Australians, and we had to keep helping our charity members, and we had to keep helping our partners do more good. But in hindsight, I didn't really see that this was lasting longer, and it actually had an impact on our staff. And that's the bit that I think as an organisation, as the leader of the organisation, I missed. And we got on towards Christmas, and we had organised that everybody was going to have a big break and that we would take 2 weeks off. And that's what we kept working towards in October, November, thinking, we've got this 2-week break, we can keep doing this. But on reflection, I think, that was a really tough time that our team was going through. And I think all of Australia was going through that. So that was quite difficult. And then we thought, we'll get through Christmas and we'll get back into 2022 and, life will be good. But 2022 wasn't what any of us expected, and Omicron had different plans for us. So when we came back to work in January, as most of Australians did, it was tough. People had Christmases that they didn't expect. And the way I look at January was that was a 30-day subscription that we didn't like, and we don't want to keep having that trial subscription. We want a different 2022. But, we said to our team that, 2022 is the year of Good 360 and the year of kindness. The last 2 years has been all about the community. We have done everything to be able to assist the community. And we look back on the year the last 2 years, and we've done $100 million worth of goods that we've put into that community or all across Australia, thanks to our charities and thanks to our partners. But, you know, that's more than, you know, 100 million in 2 years when we'd only done 125 million in 5 years. We've worked so hard for the community. But in 2022, I want to make this the year of kindness for our team. And so I want you to think about yourself first and your family first. And if you need to take a break or you need longer than expected, that's okay. So I think that's in phase 3. What we're actually going to concentrate on is that, you know, if we need longer deadlines to do that, that's going to be okay. So for me, reflecting on the 3 stages of COVID is the first phase, we got it right. We worked hard and we reacted quite quickly. And as a team, we're very proud that we were on purpose and worked really hard. Stage 2 or phase 2 is that, yes, we knew how to do this. We continued on and did the work that we needed to do. But I missed that phase 2 went too long and our team was tired. And I think most of Australia was the same because we didn't know how to do that. But in hindsight, I wished I'd picked that up earlier. And in phase 3, I think we know what we're doing now and we know to look back on our teams and on our partners and just, you know, reflect around to say that, you know, what can we do for each other and to continue to be kind, and that, you know, COVID is a beast that we can't control. And that we should just continue to be kind to ourselves and to our partners, and deadlines will slip. You know, we've got 20% of our team off at certain times, and I think that is just across Australia the same. So that's okay. And, you know, if we're kind to ourselves and to our partners, that continues to be okay, and things still happen, but, you know, we'll make that through. So, you know, we've rode a really, you know, roller coaster, but we've achieved, we've stayed on purpose, and we're doing so much good. But I think, you know, what I've learned the most is just hindsight's a wonderful thing, and I won't beat myself up over it. But if we can continue to just be kind to ourselves and to our partners, we will all as a team and as Australians get through this. So that's what I probably wanted to share with the charity sector, is that, you know, we do wonderful things, but just to be kind to ourselves in 2022, because you've worked so hard over the last 2 years.
That's a wonderful message, Alison. Thank you so much for that. Can you tell us, like, how can organisations become members and receive goods?
Yeah, absolutely. So all ACNC registered members can just log on to our website. It's free to join. So I really encourage you just to come onto our website and join, and then we can start getting goods to you into your community. So, you know, we have everything except for food. The food guys are doing such a wonderful thing like Food Bank and Oz Harvest, but we can help you with, as you can see on our slide, clothing, toys, health and beauty. We can help you get that out into your communities.
Thank you so much. I'd encourage you all, if you haven't already done so, to go into the website and have a look, because it's amazing that you find that what you can get. Thank you so much for all, Alison, for all the work that you and your team do. Good 360, very much appreciate it.
Thank you, Aidan.
It's a wonderful story. If anyone else has a wonderful story you want to share, yeah, love to hear from you. Sounding a bit like a radio presenter now, haven't I? Well, it'd be great. Okay. Now, our next presentation, AASB. Does people might not know what the AASB stands for? It's the Australian Accounting Standards Board. And here we've got Fridrich Housa. He's a not-for-profit sector lead at the AASB, and he brings experience across financial control, reporting, accounting policy, audit, advisory, and due diligence services with a wide range of organisations, both Australia and overseas. So before he worked at AASB, he was head of treasury, financial control at a major Australian bank, and Frederick was also an account director at a Big Four accounting firm. He's also served as a treasurer, a local not-for-profit environmental organisation, the co-founder of a fledgling fintech startup. So Frederick's going to give us an update now from the AASB on the not-for-profit private sector financial reporting framework. This is going to be another great presentation. No pressure on you, Frederick, so I'll hand over to you.
Thank you very much, Aidan, and hopefully everyone can hear me and see me well. First of all, yeah, thank you for the opportunity to HLB, Manjat, and Commonwealth Bank to talk to this community about what we are doing at AASB in respect of the not-for-profit sector. I would like to also, before I go further, to to mention our usual disclaimer that if I'm expressing any views, these might be a personal views and do not necessarily represent views of the board or the other staff members. So this is the agenda for next half an hour or so. To set the scene, I will provide a brief update, and I promise I will be not too detailed about what does it mean to do the standard setting at AASB, and then we will delve into more details about not-for-profit financial reporting framework project that's keeping us busy for last few years, and hopefully will be. We'll talk about why we do that project, where we are at the project, where we got to at the moment, and what it may mean for you, and then what are the next steps. I will also use the opportunity to briefly mention other projects that might be relevant to you, and obviously happy to take any questions along the way, and we'll also have a Q&A session at the end of the session. There will be some polling questions, as I will use the opportunity to gauge some views from attendees to this webinar. Moving on to the slides. In terms of the standard setting, our purpose is set actually in the ESIC Act, and really what we are charged with is to develop and maintain accounting standards to maintain confidence of the Australian economy, and that includes not-for-profit, private and public sector. And especially in that not-for-profit private sector, the user needs are coming in hand with the balance of the costs to the preparers. So we are trying to ensure that those user needs are met in effective way. We are not doing the standard setting in ivory tower. We very important element of our standard setting process, and of course our objective is the engagements with our stakeholders as well as the research. And the standard setting doesn't stop with setting of the standards, but we also have a role to play to promote those standards, provide guidance and educate. This is the process overview from the flow perspective, how that process standard setting process may look like. Very high level, it does start with the identifying of the technical issue, and it does stop with the, well, it doesn't stop really. After, as I mentioned, the standard is done, we are making sure that we are close to the community and stakeholders, and then we also have internal policy that mandates the post-implementation reviews after a certain period the standard has been effective. So there is a process where we are formally collecting views from stakeholders. Did we achieve the objectives that we wanted to achieve? And if not, what we do need to change possibly in future, or what else we should do in terms of, for example, guidance. And on this slide, I highlighted where we are in particularly with the not-for-profit financial reporting framework, and it's where the board is currently considering the results of the targeted outreach and staff views in preparation to develop a consultation document, being discussion paper, and I will talk about it a bit later in our session. Other important element, as I mentioned, is the evidence-based approach. So we do place emphasis on the evidence, either received through the internal research or academic literature, as well as talking to our advisory bodies, advisory panels. We have specific advisory panel for not-for-profit project, as well as academic and other advisory panels for other projects. We also, as a part of the not-for-profit financial reporting framework, we did perform targeted outreach, primarily focused on the existing advisory bodies of other institutions like ACNC, professional bodies, CA, CNZ, CPA, and their focus groups. And obviously that doesn't stop there. This session is part of that engagement process with the stakeholders and obtaining the evidence and feedback, as well as we have a formal steps before the proposals are finalized in any shape or form, which is either discussion paper or exposure drafts, and you may be familiar with that process, at least some. Moving on, so for the rest of the session, we'll talk about specifically about the not-for-profit private sector financial reporting framework, and here I am distinguishing between private sector NFPs and public sector NFPs, because we have a separate project for that. Also, to distinguish to the session Mel had, we are not talking only about charities, we are talking about any entity that classifies themselves as a not-for-profit entity for the financial reporting purposes. So this is why we are a list of more than couple of issues and matters that this project is trying to address and also considers. After the ITC 39, Invitation to Comment 39, which was performed in 2018, based on the feedback received, and that consultation was looking how to address existence of the special purpose financial statements and the evidence that special purpose financial statements regime doesn't necessarily result in comparable and possibly even transparent financial reporting framework in some cases. And we have also performed research that relatively high number of the I think the sample was the medium-sized ACNC regulated charities didn't necessarily disclose whether the financial accounting policies are in accordance with accounting standards or not, as well as we will find that two similarly sized entities may have made different calls whether they are reporting entity or not, and then one preparing GPFR, one preparing SPFR, they could end up in quite different reporting to the users. Through that feedback, through the ITC 39, however, it transpired that the road to comparable, transparent, but also simplified and proportionate financial reporting framework will be different for not-for-profit sector compared to for-profit sector. And that's where with the finalization of the for-profit part of the project or stage of the project, which culminated in 2020, WSB 2020-2, which removed ability to prepare special purpose financial statements for certain for-profit entities. Now we are fully charging with the not-for-profit part of the framework. And I think the emphasis is there that we do and we are aware that we want to develop proportionate and to the extent possible simplified financial reporting framework without impairing needs of the users, as well as we are conscious that there are diverse financial reporting requirements across regulators. Again, because of the scope of the project is not just charities, quite on contrary, and obviously different types within the entities within the not-for-profit sector means that their focus might be in different parts of financial reporting. And for example, that diversity transpired when we are discussing inclusion of service performance reporting in this project, which I will talk about shortly. Moving on, following the ITC 39, there was a body of the research that we have performed internally, and I have listed a few of those research reports on the slide, and they are available on our website, as well as I mentioned, we have done a targeted outreach to identify where should we start and what could be the process, how to get around this. And based on that feedback, the board in November 2020 decided to progress with the development of a consultation document. However, decided to start with a discussion paper, which is step before we would get to the exposure draft. So it's a bit longer process than we would normally take. However, that's again a recognition that of the diversity of the sector and possible significance of the change to the impacted stakeholders. As is outlined on the timeline, we are aiming to complete and issue the discussion paper by the end of third quarter this calendar year, and to consider the feedback during first half of next calendar year. And for the board to consider that feedback before proceeding to the potential next step, which could be an exposure draft. This slide outlines initial design consideration. We have been talking to some of the stakeholders and compares it to the current reporting requirements. And as you can see, the questions we have been pondering and asking is, should there be an additional tiers to the existing one? should we do something about existing ones, being tier 2 and tier 1 and tier 2 being now simplified disclosures? If there is additional tier, how many do we need, or does the sector need? And what should be the scope of those reporting requirements? For example, should service performance reporting be included in those requirements, and then should it be mandatory or not? And also, we are recognizing that we are not necessarily starting from the scratch. There are jurisdictions globally and not that far, for example, New Zealand, that already have few more tiers of differential reporting. So we are trying to leverage those sources. Before I will move to the next slide, I will highlight a couple of scope decisions the board made for the purpose of discussion paper at this stage, which is that board decided again to consult in the discussion paper that the availability of tier 1, tier 2 for not-for-profit private sector would remain as is, and that the board will work on the proposals for tier 3. So we decided, or the board decided at this stage, not to look at the tier 4, also because of the lack of, or in majority of cases, lack of explicit requirements to prepare financial statements for very in accordance with accounting standards for very small entities. Another important decision that board made, again to consult on, is not to include thresholds in the accounting standards. Again, in recognition that there is multiple thresholds across the regulators in various jurisdictions, and it's not necessarily practical to add additional complexity into that through the accounting standards. And lastly, from the scoping perspective, one of the important decisions was not to address service performance reporting as part of this project, recognizing importance of the topic to the sector, at the same time complexity of the topic and possibly diverse views from different entities, what should be service performance reporting, how to report, and should it be mandatory or voluntary. So this is likely to be addressed as a part of the as a separate project, and we are seeking feedback on that through our agenda consultation, which I will touch on later in my presentation. So moving on, here I try to illustrate how potential future state could compare to the current status of, for example, and I used ACNC requirements as an example. And as you will note, these are the recently amended thresholds that will come into effect from 1st July 2022. So essentially, what the board is contemplating is to, instead of having GPSFS versus SPFS regime and the decision whether entity is reporting entity or not, is to consult on proposal to remove ability to prepare special purpose financial statements, but in recognition that tier 2 might be too complex and too onerous for some not-for-profit entities in private sector. The board is working to develop additional tier 3. Clearly, this is then something that, in absence of the thresholds in accounting standards, will require SSB, and the board working with the regulators to ensure that the legislation and the regulations are set up appropriately to consume the future setup of accounting standards. And that's why during our targeted outreach, and since then, we are in a constant dialogue with the regulators. I will also mention that when board is contemplating and discussing what could be the requirements of the future tier 3, board has in mind the type of the entities and their complexity and possible common transactions that would be similar to the medium-sized charities. So we are not contemplating those entities that would be small charities or that would have a revenue below 500,000, because I think that's where possible tier 4. And we were thinking about cash accounting for that tier if it would come to on a table would be more appropriate. Having said that, again, in absence of majority of regulators and lack of their requirements for these small entities to report in accordance with Australian accounting standards, the focus is on Tier 3. Very briefly, so for the rest of the presentation, we'll be talking about particularly about Tier 3. Board have decided on the principles that will apply when we are developing those requirements to ensure that they are being developed in consistent and coherent way. I'm not going to spend too much time on this. I think the main principles are that the financial statements will be general purpose financial statements. So we are absolutely considering the users, the needs of the users of the financial statements. However, the consistency with Tier 2 accounting principles is desirable, but not warranted in all cases. And where possible, we'll be looking what management of the entities are already using. And as soon as that satisfies the user needs, we would look into possible simplifications in those areas. And that leads to the last principle that Tier 3 requirement should not impose disproportionate cost to preparers as soon as they are meeting the needs of the users. This is from the outline of the process we are taking to the Tier 3 proposals, and stemming from the overall project objective, which I mentioned, simple, proportionate, consistent, and transparent financial reporting framework, and then the emphasis in the Tier 3 requirements is really on that simplified requirements that meet the needs of the users. And maybe I'm thinking about simplification, it's not necessarily just maybe recognition, measurement, or disclosures, but absolutely is. But it's also about language. It's about interpretation and understandability. So there might be areas where we will would propose to keep, for example, recognition measurement from Tier 1, but the way how it would be expressed in actual Tier 3 standard would be simpler. And again, I would be not looking too far, and would be looking what, for example, New Zealand did in their Tier 3 reporting standards. So I already mentioned couple of those key tentative decisions to date, which are outlined on this slide. And I think I mentioned all of those that are here. So I'll move on to the next slide, which is specifically for Tier 3. The board is contemplating for that standard to be a single standalone pronouncement. So again, that's a first, I think, big step to the simplification. So reporters don't have to crawl through, I don't know, 40+ accounting standards. It should be all in one place. Quite a significant tentative decision was to provide or consult on option whether to present consolidated financial statements or not, obviously with some respective appropriate disclosures to ensure that user needs are still met. In more detail, permit change in accounting policy, voluntary and limited retrospective approach. So that's another simplification. And of course, board will also enable, or will propose to enable, those entities that would like to apply requirements of higher tier to do so if they want. Another simplification is that the lease payments would be proposed to be recognized on a straight line basis, as opposed to recognizing RU assets and liabilities on a balance sheet using NPV method, again supplemented by appropriate disclosures. Moving on to what the near future looks like. At February meeting, which is actually next week, the board will be talking about or considering staff proposals on the accounting for investment property and PP&E, where staff is proposing some simplification in terms of the recognition and measurement. Same for employee benefits. So I think the focus there is on how to possibly simplify recognition of annual leave and long service leave, again, without impairing needs of the users. And we are starting or kicking off discussion with board about revenue recognition. In this case, we are starting with donations, grants, and bequests. And it will take a couple of board meetings, I think, for the board and staff to work through that discussion. And at this stage, I will make it clear that this discussion is about Tier 3 specifically. And again, it's from that practical perspective of simplification. So it's different and separate conversation that we'll have in, again, near future about is there something that needs to be done with WSB 15 and 1058, which will be subject to post-implementation review very soon. And I will touch on that in a few slides. Few other remaining topics in terms of the discussion paper for this project and specifically Tier 3. The board will talk about financial instruments, impairment, disclosures, and any sweep issues that will arise either when we will look at the discussion paper in its entirety or anything that stakeholders would have raised over the time of the project until then. There may be some topics, and because it's a discussion paper, we do not aim to have a complete standard. Quite on contrary, we want to go open into that consultation. So there will be a number of the topics that haven't been raised as a significant area of focus, and they will be not necessarily then addressed specifically in discussion paper. But if then the next step is an exposure draft, of course, they would be addressed there because exposure draft will have a proposed look and feel and complete standard in it. But that's at least next year topic. Moving on, so I think I got into the next step, and it's probably wrap up of Tier 3, but still please stay with me. There's a few other projects I would like to mention to you. So we are in process of the drafting of the discussion paper, and we are gauging the feel from the board at this coming meeting about look and feel and language used. And also we will see in the poll questions, we are thinking very hard how to engage with the targeted audience of this consultation, which really is not-for-profit private sector community, and then specifically Tier 3 users and Tier 3 preparers, and obviously anyone interested in that. So we will have a couple of polling questions shortly on that form of engagement. Other projects that I wanted to touch on is the agenda consultation under the invitation comment 46. So that's our domestic agenda consultation, where we are seeking views from our stakeholders on what projects should be included on a WSB work program over the next 5 years or 6 years. And we are seeking views on projects like service performance reporting. Definition of fundraising is another one that can be or is relevant for this audience. The deadline for comments is, if I remember correctly, 18th of February. So there is not much time left, and there is a roundtable which I think is scheduled for tomorrow afternoon. So if it's first time you are hearing about this agenda consultation and you would like to take part in that, or you would like to submit comments, please do so and let me know. I will send you the invite. Another area that we are dealing with and looking into on, I should say, ongoing basis is feedback from the constituents on revenue and income recognition standards. So WSB 15, WSB 1058, and we are looking at it from two lenses. One is the narrow scope project, where we have issued ED 318, which includes some tweaks to existing illustrative examples based on the feedback what we heard so far. However, there is obviously a body of the feedback that it's not possible to address in short period of time and as a part of this narrow scope project. And that's something that will be then addressed with the upcoming post-implementation reviews, which are mentioned in the next line of the slides. Before I'll go on to the PIRs, as a part of that ED 318, and comment period there closes on 11th of March 2022. Also, board documented in their basis for conclusions its aim to keep the cost election for initial recognition of ROU assets arising from concessional leases on a permanent basis. I will use that term. So I think that should be a good news to the not-for-profit sector, to give them some certainty that they will not have to fair value those concessional leases at some point in future. Obviously, board is proposing to keep those supplementary disclosures in to ensure that, again, users' needs are met. As a part of this project, or as a result of this narrow scope project, we'll have also a webinar in line with our education strategy. We'll have a webinar where we'll be talking about few aspects of WSB 15 and 1058 that have been raised with us to date, and trying to point stakeholders to the places in the standard that they should consider when they are looking at revenue and income accounting. Obviously, the education materials cannot interpret or change the requirements of the standards, but we are hoping that they will help constituents to when they are looking at these things, especially those who might not have actually access to an advice from accounting firms. Big piece of projects that we'll be looking over the next year, or probably two actually, are the domestic post-implementation reviews. So when we say domestic, we are distinguishing between post-implementation reviews done by International Accounting Standards Board, and they will be doing post-implementation review of WSB 15 and 16 in near to medium future, and that's where we are contributor to those international projects, and in turn we are seeking local feedback when we are providing the comments. But we also do our own post-implementation reviews on the either standards that we issued as a local standard setter, or amendments or not-for-profit guidance that we attach to those international standards. So, like for example, WSB 1058 and NFP guidance to consolidation standards and revenue standard. So that process is kicking off as we speak, and you should be hearing from us once we are out there talking to people what the feedback is. As I mentioned, we already have quite robust feedback and quite wholesome feedback on revenue standards. Another project that might be of your interest is fair value measurement of assets or non-financial assets held primarily for service capacity. This project has been has more public sector focus, but once the ED will be out, subject to the board's decision, hopefully as soon as next board meeting next week, we are asking the question from the constituents whether whether those proposals would be also worth an additional guidance that is likely, or well, subject to the board decision, would be incorporated in that exposure draft, whether that would be also applicable for not-for-profit private sector. So please keep an eye on that one. Lastly, I want to touch on the resources, and I will have a separate slide on resources, I think, after this one. But there is a separate staff FAQ on not-for-profit entities that focuses on, surprise, surprise, revenue and income standard and WSB 16. So there is a link within the slides, and I'm happy to provide those links outside the session too. While we are on resources, there is a few other links that are included in this slide, and a few other areas of our website that you can have a look. There's a few staff papers and research report if you wanna dig deep. We have, as I mentioned, FAQs, either NFP specific or for example, COVID focused. Again, staff FAQs cannot change the requirements of the standard, but again should help when those standards are being applied. And the best way how to stay in touch with what we do is to subscribe to our weekly newsletter, which I included link on this slide. And probably last but not least, if you would like to access our past webinars, we actually have a YouTube channel where you can actually view those recordings. So I would encourage you all to jump on our website and have a look. I think this takes us to the polling questions. And there are two of them. First one is recognizing that maybe the preferences of community have moved or changed since COVID is with us. We all got used to virtual means. I'm keen to see what are the views of this audience if you were to engage with us, for example, to provide feedback on this Tier 3 discussion paper that should be coming later this year. What is the form of the outreach you would prefer? And we have listed options within the slide. So there is a poll question. Please choose your preference. Thank you. Thank you very much, and this is very helpful. Thank you. That's very good to see that. I think I was suspecting that webinar with polling questions will be probably a good combination of information to the audience and then getting the information back from the audience. And survey is definitely one of the venues we are going to reach the feedback. Surprised that no one prefers roundtable in person. I'm keen to get around the country and meet people. So hopefully some of those preferences may change over the time, but I recognize that it's probably not preferred option right now. Thank you for that, Paul, and for those responses. The second question is about particularly focused on those in the audience that feel that will be either a Tier 3 paper or the user in future, once it's hopefully up and running. Would they like to engage more closely with the project right now to provide feedback while we are actually live in the project? And what I mean is, for example, we are thinking to road test a draft of the discussion paper with some focus group to ensure that it's user friendly and it's accessible, and the target audience is getting the value out of it. So if you would like to be part of that process, please do let us know now and we'll be in touch. So thank you for those responses.
Well, thank you, Fridrich. That was fantastic. You know, I set the expectations on you and you more than delivered. So thank you. Thank you again for your presentation today. Very useful and insightful, and I encourage everyone to get involved with WASB in regards to these matters, because if you don't speak up, then the WSB might not know that some people have got some concerns. I've heard a number of concerns. Fridrich talked about WSB 15 and 1058, and that last question in relation to that for the Tier 3 entities. It's complex. Accounting standards, by their nature these days, are very complex and require a lot of judgment. So if you've got any feedback you'd like to provide, thoughts what you think the best way forward is, I'd encourage you to get involved. Now, Fridrich, just a couple of questions. Now, mentioned earlier about special purpose accounts and what the plan is with those. Does that mean that for all not-for-profits, special purpose accounts will be gone forever, or there's still going to be a class that can prepare special purpose, assuming everything goes through?
Yeah, thanks for that question. So obviously subject to the feedback and board's decisions once we'll get to that stage, and if we'll get to the stage, yeah, the plan would be that if the entity would be required to prepare financial statements in accordance with Australian accounting standards, they would not be preparing special purpose financial statements as such, and instead they would be preparing either Tier 1, Tier 2, or Tier 3 financial statements. Obviously, the special purpose financial statements outside the accounting standards as a concept will always exist, because there will be special purpose financial statements in a way of providing information, specific information to donors, specific information to, for example, banks, etc., etc.
So there is that option for those particular circumstances where there's not a requirement to prepare financial statements for any statutory reason, that there could be, or under accounting standards, there could be still options there for special purpose accounts. Now, next question is going into revenue recognition, which you've asked a question about the Tier 3 entities. With Tier 2 and Tier 1, there's as mentioned earlier, it's complex applying these accounting standards. A lot of judgment as well when you're looking at 1058. When you're looking at something sufficiently specific and enforceable. We'll get on the technical. We're doing the technical details for people in this room, but there's a lot of judgment as applied. Now, just to clarify a question in relation to that, there's a review that's taking place in relation to that, which is looking at all entities, not just Tier 3, Tier 1 and Tier 2, the WSB 1058. Is that correct?
That's correct, Aidan. So we are kicking off that process, which we call post-implementation review. And that post-implementation review of standards like WSB 1058 and not-for-profit guidance to WSB 15 is a separate project to Tier 3 and does include Tier 1, Tier 2. And obviously, an outcome of those two projects might be actually quite different, because obviously we are looking at for Tier 3 through the simplification lens. The lens applied to Tier 1, Tier 2 might be different and outcome might be different, but we are clearly hearing about the complexity of the standards being applied. Having said that, my personal observation is that I do see that the number of queries did decrease over the time. So some of it was probably implementation effort and issues, but we do not underestimate the feedback we are receiving. And obviously, main question, I will be quite clear about it, is that are the outcomes that are achieved through WSB 15 and 1058 in terms of the timing of the recognition of certain revenue and income types, are they useful to the users? And obviously our stakeholders are mentioning that matching might be the better outcome. Having said that, I do believe that under 1058 and 15 the entities are should be achieving more matching compared to the previous status quo under previous standards. Having said that, I think probably community expected more. I think the main challenge will be, can we get there within the current conceptual framework, and obviously ensuring that it still meets needs of the users. And just to give you also for the perspective, again, we are not in isolation, and we are looking to, for example, what other standard setters are doing, and we'll be paying attention to ISB's review of WSB 15, as well of, for example, what IPSASB does in this space, because they are coming up with the interesting concepts. But I think based on the feedback they are getting, it's also difficult to satisfy all stakeholders equally. And I had just a session yesterday on the illustrative examples where there were two stakeholders, and one was very happy with what we were proposing, and the other one was, of course, not happy at all.
Yep, that's the way. You can't please all the people all the time, unless, of course, you're HLB man, Judd.
That's the gift of standard setting to get the balance right.
It is. It's difficult, and you say you want to make things not that's going to be cost prohibitive to people, but you've got to present that information so people can compare not-for-profits and provide meaningful information. It's a difficult balancing act. Appreciate all the work you're doing. So thank you again, Fridrich, for your presentation today. I think you'll join me for a virtual silent round of applause.
Thank you very much for having me. Absolutely appreciate the opportunity to engage. Thank you.
Thank you for providing your time. All right, thanks to all our presenters. Kim, I'll pass back to you.
Thank you. Thank you so much, Aidan. And again, thank you so much to our presenters, to Mel, to Fridrich, and to Allison. I just wanted to quickly make mention to everyone after viewing some of those questions that in November last year, we actually launched our not-for-profit thought leadership financial management survey report, whereby we surveyed 70 not-for-profit leaders, and in there it actually deals with cash reserves. So if you didn't receive your copy of the financial management report, please just send me through an email and I'll make sure that you get that report. So that now closes our first webinar for 2022. The recording and the presentations, and again, thank you to Mel and Fridrich for allowing us to share their presentations with the ENFP community. They'll be emailed to you shortly and also uploaded onto the ENFP LinkedIn group. You will also receive within the next 2 weeks our strategic planning survey. Now, this strategic planning survey builds on our survey from last year, which was our inaugural report. And the report will be launched at our April ENFP, which is to be held on the 28th of April. And at this point in time, I would like to say it will be face-to-face, but I think we're just going to have to watch this space. So thank you again to our presenters. Thank you to everyone for joining us today. I know that this is not our normal timing in terms of being for 2 hours, but I just think that it was important to kickstart the year with both an update from the ACNC and the AASB. So thank you all again, and really looking forward to seeing you soon. Thank you.